Many times there are phantoms in price action on these 2 days where you could look at it and come up with all kinds of reasons why it should go up or down. And the way I frame and I teach my students, high probability is when you can frame the marketplace on a one-sidedness. That means if you're bullish, if you think it's going to go higher, there's no way that you can see it or justify why it could be a short. If you can in any capacity, it's not high probability long. And vice versa, if you reverse it, everything I just said conversely would be the same thing for a market that's bearish. If you can see things that are set up for your setups that are bearish and you want to go short, if you can find anything to frame it on a bullish idea, that's not high probability for a short sell. If you trade in those instances only, your hit rate is going to go through the roof in terms of accuracy, but your trade frequency is going to drop precipitously. And for some of you, you think that's a bad thing. It's not. You're going to save in commissions. You're going to save a lot of mental capital. You're going to have a life outside the charts. And you're probably going to enjoy trading more than you do right now. Because right now, you're trying to turn it into you're an Olympic, competitor, where an Olympic competitor is training year round, nonstop. Nutrition, training, stretching, all this stuff constantly, all the time. And you're never allowing yourself to do anything else. And you're missing out on everything. Like those individuals that work out and are Olympic uh, participants, like their whole life is that. You don't want that to be like I've done that with my life. You don't want your life to be an entire, one thing of just trading. And if you're not careful, you'll do that. So less frequency is a good thing. Higher choice setups is the best thing. And it is good because it controls costs. That means commissions. Um, every time you try to trade more, it just increases the likelihood that you're going to get that eventual losing trade or series of losing trades. And you're inviting that instance because the more times that you want to get into the marketplace, thinking that you got to get every tiny little fluctuation when you don't need it, if you get the bigger runs on the 4-hour chart to an hourly chart, that is sufficient enough. And everybody else out there that wants to try to trade every single day, if they're completely transparent with you, they're going to show you that their hit rate, their accuracy is far less than what you probably imagine it to be. And think about the things I talk about on Twitter. Think about the things I'm talking about when I do these commentaries and I'm pulling out where I think the market's going to go. I'm giving you one good idea to focus on for your analysis. When I'm tweeting and I call out specific levels, how many times am I doing that all week long? It's just a few things. But those few things, if you just focused on them, they're better than your working income. You can turn those 1 or 2 little ideas per week and they can be yielding more than your job does. And I'm training you to think that way. Now, I can go out here and slam you with high frequency trading setups every 15 minutes, just like that. And I would wear you out. Some of you would be hopped up like you're on cocaine and want more of it. But that is not what you should be aspiring to do as a developing student or trader. Eventually, over time, you'll figure out if that's your calling. If you want to be in a measure of trading like that, that's high frequency and a lot of transactions, you got to do a lot less leverage though when you do that. Not big trade size. If you're going to do a lot of high frequency trading, you're going to do it in low contract sizes because the commission costs are going to be offsetting if your hit rate is low. And you won't know that until you start trading with real money and the commissions start coming out. Okay. Not that you should be fearful of commissions, not because they're, I look at commissions as a tax. Just like when you go to your job, how much money do you earn? My salary is this. I make this much a year, or I make this much per hour, or whatever it is. But you really don't make that because everybody has their hand in it. And then you get what they think you should have after that. So that's really what you earned. And it's significantly less than what you tell everybody else that you're making at your parties and your family functions. Commissions are just like that. Okay, they're like the tax man. You can't escape it. Okay. And the more overtime you make, the more taxes they're going to take from you. Okay. Well, trading's just like that. The more you trade, that's overtime. And that overtime is going to have an offset cost associated with it in terms of commission. So I don't ever look at commissions in the sense that, oh, this is bad. When I was younger, I hated it. I was like, man, why do they keep taking all this money? Well, it costs money for them to be the middleman for you to put your orders in the marketplace. And I was paying $100 per contract round turn back then in the 90s. And you guys are bitching about paying a couple bucks. You're getting off scot free, in my opinion. But even when they're low commissions, if you do a lot and you trade a great deal of frequency, it's not unheard of for you to do thousands of dollars per month in commissions. And some of you would be afraid of that in the beginning, thinking that this is unfair. But if you're going to do volume and you're going to be pushing a lot of contracts through the marketplace, you're going to have that cost associated with your trading. So one of the things you can do is slowly grow into that by having a great deal of concern about your trade frequency and the leverage amount that you're using in terms of the contracts that you're trading, whether it be futures or the lot sizes for forex. Forex is a little bit different because you're dealing with that spread. It kind of like evaporates as long as you're on the right side. But are you really trading that accurate? Are you having success holding on to a trade or getting spooked out so many times, and those little losses are doing basically the same thing that commission costs would do in a futures trader. Okay, so everything's going to have a cost associated with it, and the more you want to trade frequency wise or the larger size and leverage, they invite more costs to your business. So that's kind of like the reason why I teach the way I do. But I also show you that over time, the data is going to support the idea that as long as your skill set is there and your experience is there, um, the sky is not your limit. Okay, you can make as much money as you want to make, but you can't get there overnight. Okay.